God, di pala ako naririnig. Yo, what's up? Good evening. How are you all doing? I hope you are having an amazing day today. Today is Tuesday, and what's gonna happen to the market? I don't know, but we have Powell speaking later at 10 o'clock. So, bukas din, magsasalita din siya 10 o'clock. And it's gonna be volatile, depende kung anong sasabihin niya, no? We'll see. We'll find out. But right now, if you look at the 15 minutes time frame, lagay lang natin yung regular trading hour gap. So, natapos na, no, guys? Natapos na yata yung gera with the Middle East. And because of that, nagpump yung market. Crazy how we all thought over the weekend na tatagal. Tatagal yung mga pangyayari or nag-uumpisa pa lang, but it's crazy what happened over the weekend. And yeah, basically, nagpump yung market. Instead of going down, nagkaroon lang tayo ng konting gap down. Then basically, the market went rip higher. So we have gap right now, and we have taken the previous day or important key level, I would say. Right? Yung key level natin on daily time frame, which is itong high na to, na taken out to. The big question right now is, are we going to push higher from here? What will be the price action looks like? Is it gonna be trade back into the middle of the range? How is it going to play out? Risk taken, Trader Mark, what's up? Good evening, Robert, what's up? Yeah, basically, guys, yung gold, it's dumping right now. It's dumping right now, gold. Strong liquidity potentially right here, no wick. After ng news na mayroon ng peace, no? Nag-dump itong si gold during the market open. Now, si dollar nag-dump din siya. Crazy. Crazy volatile. Pangit ng daily time frame ni dollar. I don't think I've seen it this ugly before. Sobrang pangit ng daily time frame niya. End dog, I believe. Okay. We'll see, guys. Today I'm gonna be trading my 1, 2, 5, 6. I'm gonna be trading 13 of my account, pero 10 lang talaga ang iti-trade ko sa mga to, chat, because yung tatlo nag-aantay pa ng payout, and ayoko mapurnada yung mga payout ng mga account na yan. All-time high, that's not a bad idea. Sa totoo lang, that's not bad idea. Not gonna lie, that's not a bad idea. So, we'll see. Market is open. Market is open, chat. We'll see, we'll see. Pangit ng ano, no, pre-market. Pre-market is not good. Like, yung 8:30, ICT everything. Where are you? So chop open so far, chop open, nothing crazy. How are you guys feeling? Yesterday was insane, volatile day. I actually took a trade earlier sa personal account ko and I took, I think, $60 loss kung di ako nagkakamali. Yeah, $67 loss on my personal account earlier. Okay, what do we have here? Itong week na to, itong 9:15 week. Wala naman tayong news, right? I don't think we have a news. Pero nag-week yung 9:15. Meron ba tayong news na 9:15? No, we don't. I'm leaning more towards bearishness at the moment dahil na-hit itong daily FVG. Ayokong balikan ng market tong high na to. Obviously, I could be wrong. Wonder na nagawa ng YM. YM is higher at the moment. YM is higher compared kay Nasdaq and starting to dump kay high. Just consolidation, really. Nothing crazy. First presented FVG ES na form na. First presented value gap. And then S&P as well. By the way, guys, today is the last day of Apex sale. So if you want to grab some accounts with 80% off, you know what to do. 80% off today is going to be the last day. I-expire na siya mamayang 12 p.m. sa Pilipinas. Gonna expire. Walang clear entry, highs, no trade ngayon. I mean, we just open like 4 minutes. Chill. 4 minutes pa lang open yung market. Just chill out. There's no need to rush. 4 minutes pa lang bukas yung market, guys. There's no reason to get crazy right now. Oh, gabi, Yuki. Just chop fast right now. No need to push the button and just chill out and wait and see. Baka i-stream ko din yung Powell testifies. Might also stream Papa Powell. Mamayang 10, mag-speak siya. He's gonna testify. Oh, kumain siya kanina ata. Oras ba yun? 2, 3? Du-du-du-du-du. Happen? What will happen now? Boring so far. We're pushing higher again. Higher again. Such a weird price action, chat. Super weird. Just chop. This is not a good price action to have. There's no point in trading it. They have Powell speaking. Powell speak. Powell speak. Lang. Anong pair po yan? IU, NQ, and ES. Nasdaq and ES. Kanina pa ako nakabang na entry kahit sa Forex ayaw magbigay. Okay. I mean, it is what it is. Just patient. Eventually, will come. Just not right now. I like the idea of going all-time high too. May Nasdaq. Oh, all-time high. 22,800. Just 500 points away. Bad. It's not bad. Now it's pumping. That's true. Now it's pumping. Ay ba ba all-time high ni Dow? Nalayo pa ng all-time high niya. Just around 46k. Now it's in. It's ugly. You have an SM. Pero, it's not the price action na gusto kong tinitrade. We are literally in a chop zone. 5. Oh, tingnan mo yung 5. We are in a shop. Ano po, broker nyo? I use Apex Trader Funding. But on my personal account, I use IC Market. I use on personal account IC Market. The prop firm I use Apex. Apex Trader Funding. Apex Trader Funding. That just made it first 9. Or inside the 7. Seven high. If going to push through here today. Wala akong ano, chat. I don't have any strong opinion right now sa market. It can go high, obviously, all-time high, but this is not the level na I wanted to go long. Right? If this is the daily candle, we want to be buying below the midnight open, right? Market has already moved 300 points since the market opened. I feel like longing here is a bit at a premium already. And wala akong targets upside, maybe just the London high. Pero this is not something na gusto kong i-take na trade knowing na meron tayong Powell speaking. Powell speaking in few minutes. Is a bit interesting to 9:30. Is just retested the 7 high, both ES and Nasdaq. Katest lang sa kanila. Took the long low high end. That is the 10 point. I want lower. Prefer ko yung lower part. If I'm gonna take that, my lower end. But this one work out well higher. From 08, nag-push siya all the way to 20. That's 12 points. Ooh, it's breaking higher. about to break the minute opening range and June 11 high. Kung mapapanood, just search it on YouTube. Sa totoo lang. Search it on YouTube, Powell speaking. This is a PW setup, no? Patrick Wheat minutes open. Hindi ko alam, baka i-stream ko si Jerome Powell. Magsasalita na siya while watching the price action. Tok ako, nakakainip yung price action. Grabe guys, si gold. If you look at gold right now, it's melting really hard. Yung no wick candle and we can see na down si gold, no? 2%. Down si gold, no? Asia open, pump, all the way. Then continue. That is brutal for gold. So for gold, have 13 minutes. Powell speaking. Oh, aggressive open at the upside. Guys, paki-like ng stream. Like ng stream natin today. Yo, no? Burp. Kailangan ko mag-burp. Kumain kami ng Japanese food ng girlfriend ko, like sa Makimura. And hindi ako nag-soft drinks. Burp. Want to burp. Right age, guys. Buti na lang soft drinks yung mama ng girl. Hey, not break the high. No. pag umabot na ng 5 points in profit, I would put my stop to break. One more push high, stop to break. One more push above here, I will go break even. Oh, fuck me. Alright. Down on 10 points. Umabot siya ng 5 into profit, but it's just didn't work out, basically. Let's see. So, after ng entry ko right here, 04, umabot siya ng hanggang 09. Umabot siya ng 5 points into profit, but just really failed to push through higher. Was unfortunate. So I'm down 11 points on the day. Overall down ako ng 1,000. Yeah, $2,000. 2,000. On to the next. Tingin niyo po ba sell si gold? Honestly, at this point, I would not even think about touching gold, given it already expanded. There's no point to expect gold at the moment. It already has done its move, and yeah, basically don't try to trade a market na super nag-expand na, because the move is already finished. Right, down ako ng $200. Yeah, oras na rin. Like 10 o'clock pa, tapos na yung volatility kay gold. Although, meron tayong Papa Powell speaking in few minutes. 7 minutes. Jerome Powell is gonna speak. I-show lang dito sa trade na to was this 15-minute BPR kanina, guys. Right here. It's against the 15 order flow. Up pa din tayo sa 15, no? Hopping around. Excuse me. para Jerome Powell. Sasabihin niya. Pag boring. Yeah. Ready na. $10 It is 10 o'clock, chat. Magte-testify na niyan maya-maya. Oh. Live eh. Weird ng kanta. Parang pang-party yung sounds ng 𝙙𝙤𝙤𝙘𝙀 pala yung nag-live nito. Ano tayo, Fox Business? Fox Business. Try po ba NQ? Buy kasi analyze ko sa market. Honestly, I don't know. I just bought the market and I just lost 2,000. The process. You can see I tried to buy and I lost. So, I don't know. Maybe follow your plan. We'll see. We will see. Carta. Tagal ni Jerome Powell. Hi, Lods. What's up? Good evening. Good evening. Good evening. Nakakatawa yung comment. Will there be a reversal on Sal? Full port short, right? Why didn't you cut rates? I'm shorting and longing weeklies.
Without objection, the chair is authorized to declare a recess at any time. This hearing is entitled the Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. Good morning. I want to thank Chair Powell for joining us today. We appreciate your time and look forward to hearing more about the Federal Reserve's outlook on economic and monetary policy. There's been a lot of rhetoric lately, particularly from our friends across the aisle, suggesting that Republicans in the Congress are steering our economy toward a recession. However, the facts tell a different story. 4 months into the Trump administration, American workers and taxpayers are already benefiting from a strong, resilient economy. The Fed noted that growth is solid, and even former Fed officials have dismissed the idea of a recession this year or is near. Compare that to the previous administration. Under President Biden, Americans endured the highest inflation rates in decades, driven by reckless spending and misguided policy decisions. Now, under the Trump administration, inflation has declined to levels lower than those seen before President Biden's flawed so-called American Rescue Plan, and real wages are finally meaningfully growing again. There's always some economic uncertainty when the United States engages in difficult negotiations necessary to secure more open markets for American goods and services. But that uncertainty is not without a strategy of balanced lower regulatory costs, pro-growth tax policy, and controls on federal spending, all combined with trade successes offer economic opportunity. One Fed official, Governor Waller, has outlined how a balanced approach combining potential tax rates with targeted tariffs could foster strong economic growth. Let me be clear on that point. We can fight to open markets, break down non-tariff barriers while achieving solid economic growth at the same time. That's President Trump's goal, just as it was for President Reagan in the 1980s. I also want to commend you, Mr. Chairman, the Federal Reserve, for taking positive steps to keep politics out of the Fed, including disbanding 4 internal climate-related committees and making the Fed leaner and more efficient by right-sizing your workforce across the system. These moves reflect a commitment to efficiency at the Federal Reserve. I'm also pleased that Governor Mickey Bowman has been confirmed as Vice Chair for Supervision at the board. Governor Bowman has been a tireless advocate for community banks, and this committee is eager to work with her on policies that enhance our bank's ability to provide greater access to capital and services for our
Jerome Powell,
families
guys,
and businesses across our nation.
Blue tie.
I look forward to today's hearing, and I yield back the balance of my time. I'll now recognize Mr. Foster on behalf of the ranking member for 4 minutes for an opening statement.
Thank you, and I will save everyone a little bit of time. Ranking Member Waters was unavoidably detained. I'll just say a little bit that the markets have kind of spoken on their confidence in the Trump economy. Probably the single simplest metric of that is that the U.S. dollar is down roughly 10%. Okay, this is not a small thing, and it is has caused
this year down
around the world to
10% on dollar.
The primacy of the U.S. dollar going forward. This is one of the worst market responses, I think, to the chaos that we're seeing, the tariffs that are very destructive to international trade, and just everything that the markets are seeing and trying to suffer through. I know I'm contacted all the time by businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of things we should be talking about, and I'm happy to save some people some time.
Market is
Let's
dropping.
get to it. Yield back.
Gentleman yields back. I recognize the Chairman of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Lucas, for 1 minute for an opening statement.
Thank you, Mr. Chairman. Today's hearing will allow us to evaluate the state of the economy and review the FOMC's policy decisions. It's appropriate to regularly take a step back and assess the central bank's performance and its responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other guiding policies that will have a profound effect on the lives of every American. Many of these topics we'll discuss today we've taken a closer look at in the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force. I look forward to building on these conversations here. One issue that I think warrants special attention is the binding nature of the SLR and ESLR on the Treasury market intermediation. I'm glad to see the Fed is looking into this tomorrow, and I hope we'll see meaningful action soon. Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue. Transparency, accountability, honest communications are pillars of our system's success. I look forward to your testimony on the state of the economy and the Fed's plans for the future. And I yield back, Mr. Chairman.
Gentleman yields back. I recognize the ranking member of the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity, Mr. Vargas, for 1 minute for an opening statement.
Thank you very much, Mr. Chairman and Ranking Member, and thank you, Chairman Powell, both for your years of public service and for being here today. Since 1977, the Fed has been tasked by Congress with its dual mandate goals of achieving both maximum employment and stable prices. Unfortunately, this administration has made accomplishing these goals more difficult. In the Fed's most recent summary of economic projections, we see a forecast for slower growth, stickier inflation, and rising unemployment, all of which point to a potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freezes impacting the collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name-calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentleman yields back. Today, we do welcome the testimony of the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chairman Powell, we thank you for taking time to be with us. You'll be recognized for 5 minutes to give an oral presentation of your written testimony, and without objection,
15 minutes, no guys, 15 minutes BPR.
You're now recognized for 5 minutes.
Now,
Mike.
pwedeng balikan ng market to.
Thank you, Chairman
downside.
Hill, Ranking Member, and other members of the committee. It's
Yan na
great
si
to be
Powell.
back here today. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the
Stable
benefit of the American people.
Lagi ganyan
Despite
sinasabi
elevated
niya.
uncertainty, the economy is in a solid
2%
position.
inflation,
Employment rate
maximum
remains low,
employment.
and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. We are attentive to the risks on both sides of our dual mandate. I will review the current economic situation before turning to monetary policy. Incoming data suggests that the economy remains solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports.
Ilang minutes?
ahead of
Honestly, I don't
potential
know.
tariffs.
Minsan
This
umaabot to ng
unusual
2
swing
oras.
is complicated.
Pag
GDP
testify na ganyan sa Congress, kasi
private domestic
daming
foreign
tatanong sa
purchases,
kanya.
or
Hindi siya
PDP,
FOMC
which excludes
minutes,
net
pero
exports, inventory
yeah,
investment,
basically,
and government spending,
pag sa
grew at a
Congress hearing
solid
yan, minsan umabot ng 2
2.5% rate.
oras.
Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment in recent months and elevated uncertainty about the
Pati
economic
bukas,
outlook,
meron pa.
largely reflecting trade policy concerns. It remains to
Maaga
be
pa ako.
seen how
Trade
these
green.
developments
Alright.
might affect
Thank you,
future
Yuki.
spending and investment.
Ingat.
In the labor market, conditions have remained solid. Payroll job gains averaged a moderate 224,000 per month in the first 5 months of the year. The unemployment rate at 4.2% in May remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing
Feeling ko,
disparities
guys,
in
magkakaroon ng
employment
malaking
and earnings
big bullish
across
candle dito.
demographic groups.
Big bullish candle.
Inflation has eased significantly
Above
from its
here.
highs in mid-2022, but remains
I
somewhat
feel it.
elevated relative to our 2% longer-run goal. Estimates based on the
Feel
Consumer
it.
Price Index and other data indicate that total personal consumption
Big bullish candle
expenditures, or
ba?
PCE prices, rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures.
Big bullish
Respondents
candle.
to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace of this decline to facilitate a smooth transition to ample reserve balances. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April.
Here's your
and have
big
since
bullish
declined.
candle.
Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
It's not
Our
worth to
obligation
trade
is
at
to
this
keep
level.
longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price
Bitcoin.
stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. To conclude, we understand that our actions affect communities, families, and businesses across
Lagi
the
niya
country.
sinasabi yan to conclude.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Yan na
Thank you,
yung
Mr.
crucial
Chairman. We'll now
part.
turn to member questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following. After the initial release of the GDP report, the president is driving the economy into a
Di
recession.
pa tapos yan.
Chairman Powell, the
Q&A pa yan.
latest FOMC statement described economic activity had to continue to expand at a solid pace, and you just reiterated that in your testimony.
Tapos na yung
this
speech niya,
morning.
pero di pa
In your
tapos yung
view,
Q&A.
Is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So, in looking at your remarks
Alam magkakasunod na green
about
candle
tariffs
all-time
today,
high?
and then the ones that you
That's
made
not a bad
during
idea.
March and April,
With very few pullback.
I was looking back at
That's
a
not
Fed
bad.
study that
Sa
noted
totoo lang.
that up
Tas
until March,
TGIF,
tariffs have already
to end
been
the week.
partially passed through in consumer prices, leading to a contribution of merely 0.1 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective tariff rates remain close to
Mahirap
10%
lang
or I assume it
maghanap
means
ng
10%
dito,
or lower.
long opportunity.
The labor market
Given
remains
that we
solid,
are in
prices
this
continue to
15-minute
disinflate.
consolidation,
So given that data I've outlined,
it's
I'm
hard.
sure data that you're very familiar
It's
with.
hard.
For the economy to avoid persistent inflation, do you concur with Governor Waller that
May
there
structure
is a
sa 1 pero
pathway
sa
for good
15,
news
this is
as it
just
relates to
consolidation.
the regulatory policies, the tax policies that I've discussed in a world with lower tariff rates?
So first, I wouldn't comment on any other FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And you said it was an issue, but that you would stay in your lane and not comment on it. But here in this year, you have commented on this idea of tariffs being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job, and we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. We're not commenting on tariffs. What our job is inflation, keeping inflation under control, and
Ayaw
also
mag-comment
keeping maximum
sa
employment.
tariff.
And when policies have what appear to be short and medium-term implications, meaningful implications for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah. You know my views on price stability. I think it's a first among equals in your dual mandate. I've argued for that. I've introduced legislation to make the dual mandate the sole mandate, and we've talked about that before. But I was very curious about your thoughts on former president of the Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than all these other factors that enter the employment picture like legislative and executive branch. What's your thought about her quote?
I personally think that's a very reasonable way to think about it.
Thank you very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Ayaw.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell.
I think very
and
possible
thank you
itong
for being
high
here.
kay Euro today.
Last week, the
Even this high?
FOMC decided to maintain the target range
This
for
is
the federal
possible
funds rate
this
at
high.
4.25% to 4.5%.
24
While I was not
pips.
surprised by the decision to hold rates steady, I was surprised by the committee's revised forecast since March, which represented a decrease of 0.3 percentage points for GDP, a similar increase for core PCE,
Since 9:30, nag-push lang
and
yung
an
EU
uptick
higher.
in the unemployment rate to 4.5%.
Itong high, oh.
Can you explain the incoming
Very
data that the
interesting.
committee has seen since March that caused it to make these adjustments?
Neutral na
Sure.
naman.
So,
Lagi naman ganyan
first of
yan
all,
eh.
these
Play
are
safe.
individual. This is not a committee forecast. These are just individuals submitting their own personal, forecasts, and we don't bless those as a committee. But I think people are looking at the incoming data and having a range of different judgments. If you look at the range, if you look at the central tendency, you'll see that it covers quite a wide range. Those are the medians that you're talking about. I think so. Inflation is projected to have moved up because of what we've seen, particularly from tariffs. And I think if you look at other outside forecasters, you'll see very much the same thing.
And
the
what
same is also
data are
true.
you looking for?
Well, we look at the incoming data on, we look at our own forecast, and we ask ourselves what's likely to happen. You know, monetary policy has to be forward-looking. A forecast is a prediction of what's going to happen in the future.
Thank you. In its statement, the committee announced that it will continue to monitor the implications of incoming data and adjust the stand of monetary policy as appropriate. Some analysts predict 2 rate cuts by the end of the year are still on the table. Is this a fair and accurate assumption? And what incoming data will the committee need to see to consider these cuts?
So what will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is that a significant majority of the committee, but also there's a pretty significant minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down a cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will, you know, the story has been evolving, and
Nasa
our
chop pa rin
thinking has
tayo,
been
guys.
adapting, and that will continue.
Don't want to overthink it
Thank
right
you.
here.
Chair Powell, although a
For me,
ceasefire
coin
has
flip
been
to, coin flip.
Tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken. While at this point, Iran is seen as unlikely to close the Strait of Hormuz, that decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustment to economic projections and its stand on monetary
Look at
policy?
EU, guys.
I think it's too early
Just
to
flying.
to know what any economic implications might be, and
The
I
best
would not
setup
want to
here is
speculate.
this one,
Like
Egypt
everyone else, we
VG.
are, of course, watching the
Hold through
situation.
this chop.
Thank you. And Chair Powell, after reviewing the economic data following
43
the meeting
points,
last
not
week,
bad.
it seems to me that the committee is indicating that we could
43
be
pips.
headed for a situation where inflation accelerates while unemployment rises and growth become more sluggish. In this scenario, this will put the Fed's dual mandate
Solid to.
of maximum employment and price
Not bad.
stability
I think abot to
in
si Iyong
tension with
dito.
one another. In this scenario, how does the Fed balance these priorities in order to
Grabe si
achieve
Gio.
both mandates?
So let me say that we're not facing that right now, and that isn't really our forecast that we will face
All-time
such
high
an
this
issue in a
year, I
serious way.
think.
But if that does happen, then
Pero
what we
hindi
do
pa tayo
is we look at
all-time
the
low.
two goals and we see which one of them is farther from its goal. Two variables, you know, is maximum employment or price stability farther from its goal, and we prefer the one that's farther than its goal. And then we also ask ourselves, how quickly will they return to goal? It's a very difficult situation for any central bank, and you know, I would say again, we're not in that situation right now.
Thank you, Mr. Chairman. Yield back.
The gentleman's time has expired. The Vice Chairman of the full committee, Mr. 𝙘𝙤𝙘𝙧 of Michigan, is recognized for 5 minutes.
Thank you, Chair Hill and Chair Powell. Good to see you again. I got a lot to cover, so we're going to try and keep this concise. But following up a bit on what Chair Hill had been talking about, you had said in January 29, 2025, quote, "We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy." I would add energy into that, by the way. "We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. This is no different than any set of policy changes at the beginning of the administration. However, December 18 of 2024 at the FOMC press conference, you noted, and I'm paraphrasing, that some Federal Reserve officials began to incorporate preliminary conditional estimates of how fiscal policies might impact the economy into their forecasts." This seems inconsistent, and I sidebarred with the chair to say, okay, did I hear this correctly, his question and sort of your answer? What I heard is that there was a belief that the IRA would not be inflationary, but that tariffs could be, therefore, suddenly you and others were commenting on tariffs. And for the institution, I know you try to be consensus-driven. Why are there FOMC participants making fiscal policy assumptions into their forecasting when you yourself said that fiscal policies need to be articulated before the FOMC can make a plausible
Hirap na
assessment
tanong
into
nito.
their implications, what those will be? And I think if there's different participants having different assumptions, that would render the SEP, Summary of Economic Projections, biased, meaningless, useless, less impactful, and when you're not comparing apples to apples. So wouldn't it make more sense for all the forecasters to make the same fiscal policy assumptions at the same time? Or if not, shouldn't each participant disclose what assumptions that they're using and building into that?
Well, it's not
Here's the question.
So that's a great question. That really, when the Summary of Economic Projections was originally designed and put into effect in this way, the way it works is that individuals are free to make whatever assumptions they want, and they do disclose them. They disclose them in their speeches and things like that. So there will be situations where some people incorporate something and others don't, and we try to be transparent about that. But that's kind of the way it works. When I say we don't take it into account, I'm really talking about policy and the committee as a whole, where we won't take things into account until we know.
And you believe that the participants disclose their assumptions when they're doing their forecasts?
Well, I think they do that in their speeches. Each people go out. You may have noticed there are a lot of speeches.
Well, I guess the opaqueness of the Fed has been something over the arc of my 15 years on this committee, has been one that has been debated greatly, including auditing the Fed and a number of other things that have gone on. I've got here a brief moment. I do feel like I need to touch on interest rates. Not to be a shock, you asked how the family business was doing back in Michigan.
Ingat, thank you.
Families involved in sand and gravel and aggregates.
Hit the
and
like before you
construction and
go.
things like that. It's been strong. We need more labor. We need a few other things on that, what's happening. But I mean, I think there's no recession. That's been established. There's no hyperinflation, or certainly not as what some had been projecting. Yet there seems to be higher than expected, or certainly desired, interest rates for many of us. And I'm curious how high interest rates, they hurt Americans who are paying car loans, credit cards, mortgages. Just this morning, you had FHFA Director Pulte asking for lower interest rates, which would obviously impact home buyers as well. So what is it that's keeping, in your mind, the Fed from what many of us believe is the right thing to do, which is to lower some interest rates, and by the way, match what the Bank of Canada, Bank of England, the European Central Bank, the Swiss Central Bank, a number of emerging central banks. By the way, that's your own assessment on page 33 as where you're laying that out. Why aren't we doing what the rest of the world is doing? Is it because we're at full employment? Is it because of those tariffs concerns that you said weren't part of the analysis? Was it energy, groceries, durable goods? Why?
So you're right that if you just look in the rearview mirror and look at the existing data that we've seen, you can make a good argument that would call for us to be at a neutral level, which would be, a couple of cuts or maybe more kind of thing. The reason we're not is the forecast by all professional forecasters
Guys,
that I
nasa
know of on the
73-point
outside
range
and the
tayo
Fed
for the past
do expect
1
a
hour.
meaningful increase in inflation over the course of this year. When I said we weren't going to talk about tariffs and inflation, that was to say until we see what the policies are. And so now we know a lot
Gentleman's
more.
time
It's
has
6
expired.
months since I said that. So anyway, I'd be happy to continue this with you.
Thank you.
Gentleman's time has expired. Gentleman from Michigan, Ms. Tlaib is recognized for 5 minutes.
Thank you so much, Mr. Chairman. Chair Powell, last month there was research published in the Journal of Urban Health that found that more than half of Black women of reproductive age, that's the term they use, in the counties that I represent, that had experienced some sort of eviction during their lifetime. So that's like 50% of Black women in the two largest counties, Wayne County and Oakland County in Michigan. And these numbers are horrific. As you know, were you aware of that?
No, I was not.
And evictions are often very traumatic experience, but also it creates a cycle of poverty, but also this instability for many families. But especially when it
Parang
comes
emotional
to a
yung
lot of
nagsasalita.
our Black neighbors, the access to equity, the access to housing is diminished even more. In Michigan, we lost more Black home ownership than any other state in the country during the last recession. So we know the housing crisis, I believe, is structural, and some may say it's a policy choice. While there are many factors at play, and you know this, Chairman, high mortgage rates, the finance rates, and so forth.
You're pushing higher again.
That drag the supply of new housing. But last month, new housing hit a 5-year low. Are you familiar with that?
I'm not sure exactly what statistic you are referring to.
Okay, I don't know. There was all this articles about the housing market and the impact of tariffs and so forth, and they said, again, it hit a 5-year low. And again, I'm
5-year
getting
low.
this from a source. But this sets the market up for higher inflation and more burdensome housing costs to years to come.
I
Chairman
sold sa
Powell,
5 minute VG.
I'm looking at this monetary whatever policy framework that you guys have put together. Do you think that the way it's structured, and again, I'm trying to understand how you're looking at this in the housing crisis, do you believe it's eroding new rental supply under construction right now, leading to high inflation in future years?
So I think there are two things going on quickly. One is just there's a longer run shortage of housing in the United States, which there's nothing that the Fed can do about. That's not something we can affect.
Well,
There's also, if I may say, in the short run, rates are high, and that's going to weigh on housing activity. But the best thing we can do for the housing market, the absolute best thing, is to restore price stability so that rates come down and so that rates can be at a
But don't
level
you
that
think
people
that
can
the
afford.
restrictive monetary policy the framework you all put together undermines long-term price stability right now by reducing the supply?
No, I mean, I think
But
it
you're
restores
reducing
restores
supply.
price stability. The point of higher rates is to,
So
and
you
it
don't think
does
the
affect.
higher rates is impacting future supply of housing?
So I think what that does is, I think interest-sensitive sectors like housing are
pag-away
very
na.
much directly affected when we cut rates or when we raise rates. That's right. But that's part of the mechanism for restoring general price stability.
So keeping the high interest rates does not impact future supply of housing?
It does not, over the long.
I need to go back to talk to
Over the long
women
run,
that the
the
study.
Fed will not be, our policy will not be a driver of longer run housing supply in the United States.
Okay, let me ask you, what is the difference? And I'm honestly confused. I want to learn here, and I'm sure people listening to this wanna
pag-away
learn.
yung pota.
What is the difference between demand-driven rent inflation and supply-driven rent inflation? Like, you guys use these terminologies. What is that? How do I communicate that to the public? What is the difference between supply-driven versus demand-driven rent?
Those are not terms that we use particularly often.
What's
but
supply-driven formula?
that would mean that there's not enough supply to meet demand. But at the same time, it also means there's more demand than there is supply.
So are you guys ignoring that?
No, but as I said again, our policies will not affect in the long run.
No, I'm being
either
serious,
demand
'cause I
or
see somebody
supply
behind you
in
kind of
housing.
I'm being serious, y'all. We're talking about a housing crisis that is getting worse right now because we're not paying attention to future instability that the current rates, and you can raise your eyebrows and all this stuff behind. I don't know. I mean, do you understand? Like, I come
Comment,
from
tingnan
a
mo.
community right now that I believe is now being impacted by the current framework that you're putting together. That I
Can
do
hurt
feel like
iron,
it's going to be long-term
bota.
effects
Go
on the
sister.
housing crisis, and you're ignoring it.
No, we're not, actually. We think the very best thing we can do is to fully restore price stability at the
Emotional
aggregate
discussion
level. That
lang
will be
to.
the best thing for homeowners and for home
Even though the
builders and
housing
everybody
supply
else.
has been
That's
impacted
in the
by
long
it.
run, that is
Yeah.
the single
But
thing
Chairman
that
Powell,
Congress
you
has
see where I'm
assigned us
coming
to
from.
do.
But you see where I'm coming from. It is impacting future supply of housing, right?
Not in the long run, no.
Okay, well,
Gentlewoman's
Mr. Chair,
time has
thank you.
expired.
Time is
The
expired.
gentleman from Wisconsin, Mr. Style, who's also the chair of our subcommittee on digital assets, financial technology, and artificial intelligence. You're recognized for 5 minutes.
Thank you, Chairman Hill. Thank you,
Saka
Chairman Powell,
pinapakita yung
for
mukha
being
ng
with us
yung
today. I want to
kausap
dive
niya.
into two actions the Fed's recently taken to get a
Yan
little
nga ako ng
additional
iba
color
YouTube
on.
video.
Yesterday, the Fed announced that reputational risk would no longer be a component in bank exams. I viewed that positively. I viewed the reputational risk as often being a catch-all for political bias. I think it's positive to depoliticize bank exams and instead focus on the core and measurable risks. Could you provide color as to whether or not any new or
Nakita ko,
new
guys.
information came to light that
It's the right thing to do. I agree with you, it's the right thing to do. Why was it, any timeline as to why that was done yesterday versus previously?
No, I think this is a problem that
So, mas
we
maganda
came
to.
to understand as a problem over the course of the last couple of years. And, began considering what's going on here. We're hearing a lot of reports of debanking and that sort of thing. And over the course of really 2024, came to the view that this was a serious problem that we need to address. And we've said that publicly, and now we're doing this, and so are the other agencies, by the way.
I appreciate you taking that action. I do agree that there were real political bias in some of
Makita
those
sinakaaway niya
exams
kanina.
related to
Pwede ko bang
regulated
iba?
entities.
Between
Ito.
supply-driven versus demand-driven rent.
Those are not terms that we use particularly often.
What's
but
supply-driven formula?
that would mean that
Space, several statements on digital asset related risks that deterred bank involvement in particular. You in the Fed and others, the Fed have spoken positively about the House and Senate work to regulate stablecoin in particular, a real opportunity to dollarize the globe and be a significant purchaser of U.S. Treasuries. Following that action by the Fed, have you seen an identifiable shift in banks or other regulated entities as it relates to engagement in the digital asset space?
I wouldn't be the one to be
Yan
picking
na,
that
crypto,
up first,
digital
but,
asset
what I
space.
do see is a very significant change in the tone, and it really does reflect evolving thinking and the evolving status of the crypto industry. And I would expect over time we'll see more activity.
How is the Fed evaluating and overseeing banks or other regulated entities that are in the digital assets or crypto space?
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is protective of safety and soundness.
Thank you very much. Let me shift gears because I want to give you just a little bit of an opportunity to comment
Crypto yun, crypto.
on the
Tapang
housing
crypto yan.
sector once again, but give you a little freedom here to speak to
Pero
that
ng
area.
Bitcoin.
You correctly are trying to balance inflation and price stability, but also higher rates have a significant impact on the housing market as shelter and housing costs are a significant driver of why many families can't afford the things that they need. Can you provide color as to how you're analyzing the impact that housing and shelter costs have on families and on inflation with your desire to maintain price stability at the interest rates that is currently set by the Fed?
Sure. So, we realize that people are feeling high housing costs and high
Starting to
financing
push.
costs. In terms of inflation, we look at something called owner's equivalent rent and rentals, and that's meant to capture both rented housing and owned housing. And it's been very sticky. It's been one of the stickiest parts of inflation. I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part, really it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work. Even then, though, we're still going to have a housing shortage.
Positive nga yung comment.
What data do you think is leading to the reduction in the rent equivalent?
I just think it took time. So the thought is when you would think that if rents come up every year, you would think it would take 1 year or 2 years for a lack of growth in rents to show up in a lack of growth in housing
26
prices.
points
It
pa
turns
lang
out
yung
it takes
Nasdaq
4 years or 3 years.
since they opened.
If you're an existing tenant, it's a complicated thought, but if you're an existing tenant, you don't actually catch up the way you would if new tenants came in. And so that's made the measurement of inflation stickier. But I'm happy to say we've been through that period now, and we are really seeing now housing services inflation pretty close to where it was when inflation was solidly at 2%.
Thank you. I yield back.
Gentleman yields back. Gentleman from California, Mr. Liccardo, is recognized for 5 minutes.
Thank you, Mr. Chair. Chairman,
Maraming
thank you for
nagtatanong, no?
your testimony today. I appreciate that your dual mandate is full employment and price stability, and I appreciate your efforts on behalf of our country to achieve those. My understanding is that critical data is collected by the Bureau of Labor Statistics to help formulate the indicators that you rely on, that we rely on to understand unemployment rates, CPI, and other inflation indicators. We are certainly hearing a lot about the impacts of DOGE on our workforce, and specifically about the elimination of many of those positions in BLS. And now we have a proposal in front of Congress to cut $56 million from that agency. Are you concerned about the ability of your team to get accurate data and about the ability to have reliable indicators to make good decisions upon?
I wouldn't say that I'm concerned about the data today, although clearly there has been a very mild degradation of the scope of the surveys and things like that. But I would say the direction of travel is something I'm concerned about, and that is measuring the U.S. economy carefully and well is a project that's been going on, and we're getting better at it for 100 years and more. And
20 points na CES, dapat sinasdak 100 points na.
Congress and for businesses, frankly, to know what really is going on in the economy, what's happening. Is growth high? Is it low? And all those sorts of things. So I think it's a smart investment to just continually try to get better at measurement of what's happening in the economy. And I don't like to see that, the kind of stories I'm reading and the idea being that the data is going to become more volatile and less reliable. That'll make it more difficult for the private sector and for you and for us. And I don't like to see that direction.
I agree. Thank you. I appreciate that it's not your role to comment on the advisability of specific policies, but given your critical role in ensuring price stability and reducing inflation, I have had conversations with, quite recently, just a week ago, with a C-suite executive of a major global retailer who informed me, because I asked, why aren't we seeing the impact of these tariffs and price data yet? And he said, it's coming in the third quarter, because it takes time for tariffs to work their way through a distribution chain. Often what you have on the shelf today may have been imported 2 or 3 months ago. Is that your understanding? Do you anticipate there may be impacts down the road?
Yeah, that's very much what I hear. I happened to meet with an unusually large number of business people in this last FOMC cycle, and that's a typical thing that they'll say, especially the retailers, that what's being sold now was in inventory in February, let's say, and it just isn't showing up yet. So we do expect to show up, tariff inflation to show up more, but I want to be honest, we really don't know how much of that's going to be passed through to the consumers. We just don't know, and we won't know until we see.
Lapit na rin matapos yung quarter daw.
Could be higher. We have to wait and see, which is kind of what we're doing.
Ano na lang, 6 days, matatapos na yung quarter.
Another thing he told me that had me very concerned was that often they will increase prices on goods not subjected to tariffs to compensate for the very substantial
points na lang away from all-time highs, like 500 points, and this is not impossible. 500 points can be done in one session.
Price elastic goods. So in other words, necessities will also tend to bear a higher price, even if they're not subjected to tariffs. Is that your understanding of the potential impacts?
That very much is something that companies will tell you that they do. If they can't cover the losses on the thing that's being tariffed, they'll find other ways to do it. We actually don't have prominent examples of that yet, but that's certainly a possibility. And that did happen in the last tariff episode with washing machines and dryers.
Thank you, Mr. Chairman. And finally,
there's
indications in the introduction of the report that the Fed is losing its ability, as we see interest rates getting closer and closer to the minimum threshold, the ability to stimulate this economy in times of recession. We haven't had a recession, or at least we haven't had an extended recession in a decade and a half. I am particularly concerned now as we're looking at debt
15 minutes.
That is being considered to be imposed on future generations by this particular bill. Could there be a combination of very high debt and very little room to move in monetary policy that could undermine our ability to respond to the next recession?
So we faced that issue quite a bit in the era of very low interest rates, but we're at higher levels of interest rates now, so there's significantly more room to cut than there was then.
Thank you.
This will be my last trade as well, Chad.
Mr. Fitzgerald, you're recognized for 5 minutes.
If matalo ko dito, I'll be 0-2.
Chairman Powell, thanks for being
Down
here
on
today.
$400.
Appreciate it. I want to go back to something I we had some brief discussions
Okay.
about this in the past, but in September of 2024,
A weak test.
with core inflation still being above target and the labor market was holding steady at the time, the Fed made a decision to cut rates by a full 0.5 percentage point. It kind of raised some serious questions as to whether or not the data truly supported such a move at that time. And I think some of us were surprised that it was a full 0.5%. So can you revisit that again, what the
50
Fed
na
was thinking
macro
at
time.
that time? Because it seems to be somewhat of an enigma now. It stands out as, why was this done? Why was the 0.5% done at that point?
I'd be glad to. So, first of all, actually the inflation and
I'm
employment
failed, chat.
readings were very similar then to what they are now. They
10
weren't-
points
they
is
weren't
going to be
terribly
above
different, a tenth
here.
or two.
Right.
But the difference then was you mentioned that the
bit
labor market was
high.
stable. It wasn't. The unemployment rate had actually gone up.
Masyado siyang mataas, but been on and stop. Trade. Ako na matalo in that trade. Going. Lang sadyang choppy at the moment. Choppy price action at level. Way too high for my 10 points. Masyado siyang mataas, no? This is the top high and yeah, really I will be break even. That's unfortunate. I got slipped 1 point. Break even na ako, but I will take another stab and
Almost a
karoon
full
pa ako ng
percentage point.
chance.
I was very clear about this. We were very clear about the federal funds rate was 5.3%, so definitely very restrictive level. We were the last of the big central banks
10:50
to
na din,
cut.
macro time.
So we wanted to make a statement that we were supportive of the labor market and not just inflation. We've been focusing on inflation. I was quite clear about this. So that it was all about the labor market. Inflation was the same and unemployment was roughly the same, but it was the rate of change with the unemployment rate that raised a lot of concerns. And remember, we were being criticized for being late to cut. So we could have done 25. If we'd done 25 in July, we were criticized for not cutting in July. Instead, we cut 50 in September. And it seemed like the right thing to do. And at the end of the day, we do what we think is the right thing when we think it's the right thing to do. We don't take into consideration political factors. If we start doing that, I don't know where that stops. Once you start considering elections and stuff like that, where does it stop?
And I didn't want to insinuate that it had anything to do with the election itself, but there just seems to be some very similar numbers right now. And I'm wondering, and I don't bring this up because I want to kind of make a point about did the Fed
Copy,
do
yeah.
the right thing or not. I bring it up because it seems like everything's in place right now to kind of do the same thing, make the same move. I know this morning already, you've talked a little bit about where you were on inflation right now and kind of what you're watching, but is there any lesson there? I mean, are we in a position where it would be appropriate
It's hard.
to do
Ang hirap
something,
kumuha ng 10 points sa market na to
as
because
big as a 0.5%
literally yung
cutting
range
it?
is 80 points.
Well, look, as I said earlier, if you just look at the basic data and don't look at the forecast, you would say that we would have continued cutting. The difference, of course, is at this time, all forecasters are expecting pretty soon that some significant inflation will show up from tariffs. Now, and we can't just ignore that. But we're not. We're just saying let's wait and see more. That's all we're doing. And if you will have noticed, a substantial majority of the committee has written down rate cuts in the remaining 4 years, four meetings this year. So it's just a question of being prudent and careful. But at a time when the labor market is still strong, we don't see weakness in the labor market. If we did, that would change things. we're going to continue to adapt as the data adapt. But that is the difference between then and now. Then, inflation was forecasted to continue to come down. Here, it's forecasted to go up by all forecasters. So, and again,
Tingin
we're
ko
not
abot dito
overreacting
to.
to that. We're just
Itong
saying,
push
hey,
higher na
let's-
to,
as long
abot
as
siya
the
dito sa
economy's
week na
strong,
to.
we can take a little bit of a pause here.
346.75.
And that's what we're doing. And again, continue to adapt as the data comes in. If we see data that suggests that inflation's not going to produce big increases, that would matter. And if we saw the labor market weakening, that would matter too. But we don't see those things.
What about supply chain? In 2020, that was a big issue, obviously related to COVID. But I know myself and other members, when we're in our districts and we're specifically talking to light manufacturing, there's concerns about the supply chain. Is that part of the data package that you review when you make a decision about where we're headed in the future?
Very much so. I think that's one of the great, well, won't call it a great thing, but one of the lessons to be taken from the last episode is supply chains really matter. We're watching that carefully. It's too soon to say really on that. We're not seeing it yet, but we could.
Gentleman's time has expired.
Thank you, Chairman. Yield back.
Thank you, Mr. Fitzgerald. The gentleman from New Jersey, Mr. Gottheimer, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as a member of the Intelligence Committee, I'm deeply concerned about the threat of Iranian cyber attacks on our financial system as retaliation for our strikes on their nuclear facilities. In its cybersecurity report last year, the Fed acknowledged that critical infrastructure, including financial services, is at risk with rising geopolitical tensions. Iran has a history of targeting American infrastructure companies and financial institutions and banks, which could obviously threaten and cause economic damage. What actions is the Fed taking now to monitor and defend against Iranian or proxy cyber threats targeting our country's
Bakit kay
financial institutions?
Powell tinatanong yan?
So we're in touch with the other regulators and the parts of the government that work on
Cybersecurity kay
cyber,
Powell.
as you know, and we're in touch with the banks to say, for people to be on the alert for things like that to happen, and also we're on the alert because we're a target as well. So you're right to raise it. It's a big issue.
You're right to
I feel like
raise
you have
it.
the resources right now to be prepared for that.
Yes, I mean I think we do. We spend a lot, and the government generally spends a lot on these things, and but you can never.
So
ever
far,
be
yung
comfortable
ES
in
has
this
a
area
bullish
because,
structure on
the
5.
bad guys are always getting better, so we need to keep.
Nice structures of 5,
Thank you, Chairman.
CES.
Switching gears, the president and members of his administration have recently called you out, various name calling for certain decisions you've made. I know that some people worry that the president's bullying will impact your decision making. I know you work together, and I know that and respect obviously
President
your independence
bullying.
greatly. Anything you
Binubully
want to
siya ni
add
Trump.
and give you a chance to reiterate your
What's
independence
up?
to the American people?
Carlo.
I would just say we're focused on one thing, and that is we want to deliver a good economy for the benefit of the American people. That's it. And anything else is kind of a distraction. I don't mean to refer to any particular thing, but we stay focused on that task all the time. We always do what we think is the right thing to do. And, we live with the consequences. And I don't know how else to do the job.
Right, so the name calling and the Mr. Too Late and all that stuff.
They're too late.
The American people shouldn't worry about that. You're focused on being independent.
That's what I care about.
Mr.
I care
Too Late
about
ang
doing the
pota.
job for the American people. The things we do matter a lot for people's lives, and that really concentrates the mind. You want to just stay focused on that task. As long
Binubully
as
siya
you're
ni
sitting in
Trump.
these chairs that we occupy, focus on that task, do what you think is the right thing, and take the consequences.
Thank you, Mr. Chairman. You've previously stated that you view stablecoins as a form of money. Payment stablecoins are already being used for both retail and wholesale payments, as well as for settlement. Recently, this committee passed the Stablecoin Act and the Senate passed the Genius Act, both aiming to establish clear regulatory frameworks for fully reserved dollar-backed payment stablecoins. Given their design to maintain a stable value and be redeemable for U.S. dollars, should the SEC or other regulators explore treating these stablecoins as cash equivalents for accounting or financial reporting purposes?
So let me say, I think it's a great thing that bills are moving. We need a stablecoin framework on that particular issue. I don't have a view for you. I can come back to you on that.
I'd be grateful. Thank you. High rates have also caused, as we've discussed, the cost of paying off our nation's debt to skyrocket. The CBO estimates that interest payments will cost the U.S. $1 trillion in fiscal year 2026 and continue to rise to almost $1.8 trillion by FY 2035. How do you see us continuing to be able to afford to pay off our debt at this
Super
rate?
boring.
And as the U.S. continues to borrow, how does that impact your decision to keep or cut rates? Obviously, foreign countries like Japan, who are significant buyers of our bonds, have started decreasing
Although,
their purchases
we're
significantly.
getting some decent
Other internal
movement.
pressures worldwide are having that impact. Are you worried
Finally.
about this global issue?
Fiscal policy and it really is not our job, and it's not something we take into consideration
Tagal, di ba?
in monetary
Tagal
policy. That's
ng
really elected people's jobs. And
QA? Sana
I
umabot
would
ng
add
2 hours
that,
to, alam ko eh.
for some time now, the U.S. federal fiscal policy has been on an unsustainable path, and I'll limit myself to that.
Last question. Last week, you chose to keep rates steady, and families in our state, as you'll hear from a lot of people today, are really struggling with the higher cost of borrowing and putting off bigger purchases on things like cars and homes. As a result, their wallets being crushed by these price hikes and obviously the president's tariffs. What do you have to say to Jersey families who are struggling with higher costs, and how you look at how they should forecast themselves for their own families?
Back into the range.
We're committed to returning inflation sustainably to 2% and keeping it there in the long run. And what we're doing now is
Ito initial
we
balance
cut
ni Matt.
rates by
TBM.
100 basis points, so they've come
First,
down quite a bit.
9:30, 10:30
And,
high.
when the time is right, I
Initial
expect
balance
that will
high,
continue.
initial balance
And
low.
that will depend on
I
on
think
economic
possible
factors,
nag-short dito si
in
TBM.
the coming months for starters.
Ano
Thank
niya
you.
to,
I yield
set
back.
up
Thank
niya
you,
to.
sir.
Gentleman yields back. Gentleman from Nebraska, the chair of our Housing and Insurance
IB.
Subcommittee, Mr. Flood, you're recognized 4 or 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, later this week, the banking agencies will be proposing changes to
11
the
o'clock.
supplementary leverage ratio, which we think are long overdue, considering the Fed in 2021 indicated that they would soon put out proposals for reform to the SLR and never actually did. However, our understanding is that the proposal being considered this week will not allow for treasuries to be excluded from the
11:10
SLR
chat. Pag wala pa akong
calculation.
trade, I'll end my
Secretary
day
Dissent
here
earlier
for
this
a
year had
12-point
argued
loss.
that such a change could serve as a boost for banks and their ability to intermediate in the treasury market, and could potentially pull treasury yields down 30 to 70 basis points. Chairman Powell, do you agree with the Treasury Secretary's comments on the potential positive impact of SLR reform on the treasury market? And what is the rationale for
Testing
not
IB
excluding
again.
treasuries from the SLR calculation in the proposed rule?
So I agree that when the leverage ratio is binding, it discourages banks from undertaking low margin, fairly safe activities such as mediation in the treasury markets. So this should encourage more mediation. I don't have a numerical estimate of how much that would matter, but I do think it would matter. I think it was important. I've supported leverage ratio reform for a very long time, since before 2021.
Chairman,
in terms of the structure of the thing, I think we're seeking comment on a particular proposal that doesn't involve exclusion, but we're also asking a question about exclusion.
Mr. Chairman, considering the Fed temporarily excluded treasuries from the SLR calculation during the COVID pandemic, were you aware of any safety and soundness or financial stability problems that arose
Maraming
as a
sell side
result
sa
of that
baba, no?
decision? And if
Basta may
not,
SMT kay
why
ES.
was that relief terminated in 2021?
So that was an emergency measure.
But I like
From
this.
the beginning and end, it was an emergency
I like
measure. I think,
250.
my long-held view is that we should have a permanent measure, and now we're going to. And we have an open board meeting on Wednesday
tong level na to.
afternoon. And after I finish my hearing on the Senate side, and I'm very much looking
night,
forward to putting
Lods.
this
Thank
proposal
you.
out there for comment.
It's a boring day. I wish I
In
could
March,
make
the
it
Federal Reserve,
entertaining.
together with the FDIC and the
But
OCC, announced
this
that
is
they
part of
intend
the
to
game.
issue a notice of proposed rulemaking
Part of
to
trading.
repeal the 2023 Community Reinvestment Act and replace it with the legacy CRA framework. Nearly 3 months have passed since this announcement. What is the status of this project?
Well, we're going to do what we said we were going to do. It's just a question of execution, and I think you'll see that coming. This would be so Vice Chair Bowman has the job of sequencing these things, and that one's certainly coming.
Do you intend to issue a proposal that will be a clean rescission and replacement of that rulemaking, or are you considering amendments to the legacy rule?
I honestly don't know. We'll come back to you on that.
Okay, so we should know more later this week?
We might, yeah.
Okay. Finally, I'd like to build off of what Congressman Style asked previously on the Supervision of Novel Activities program. Do you feel any changes could be made to it to encourage innovation, and do you anticipate any such changes to the program?
I do, and I also think Governor Bowman, now Vice Chair Bowman, is someone who is actually deeply knowledgeable and experienced in supervision, and that hasn't really been the model. We've more had people who are experts on regulation. I think she brings a particular ability to move supervision in a healthy direction while also preserving safety and soundness, and that's what you mentioned is one of the dimensions in which I think that will be true.
Thank you for your testimony today. I appreciate your service to the country, and with that, I yield back, Mr. Chairman.
Thank you.
Gentleman yields back. The chair recognizes the ranking member of our full committee, Mrs. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I appreciate that despite the repeated attacks by the president and his cabinet
Repeated
on
attacks.
you personally, that you stood your ground and you did not bow to pressure from Trump,
All-time high, all-time
especially
high.
given the current state of economic uncertainty due to his policies. Last week, the Fed held interest rates steady. Afterwards, you said that you and other experts continue to expect a meaningful amount of inflation due to Trump's tariffs. You said that it may take some time for the tariffs to work their way through the supply chain, but that you found, and I quote, many companies do expect to put some or all of the effect of tariffs through to the next person in the chain and ultimately to the consumer, quote, end quote. So while the president may try to claim other countries pay these tariffs, can you confirm that it is indeed consumers and businesses in the United States that will bear these costs?
So it can be anybody from the exporter, the importer, the retailer, the manufacturer, or the consumer that winds up paying these tariffs. In the beginning, it will be the importer that pays the tariff, but ultimately it will be spread out among those 5, each of which will try very hard not to contribute, but in the end, the tariff will be paid. And all of the data suggests that at least some of that will fall, not all of it, but at least some of it will fall on consumers.
Well, you indicated it may take some time for tariffs to work their way through the supply chain. Would you elaborate on this, including when is it that we can see negative impacts to inflation from Trump's tariff policy?
So, the things that are being sold at retail now, they might have been put into inventory before the tariffs in February or March. So we think we should start to see this over the summer, in the June numbers and in the July numbers. And if we don't, I think we're learning here. If we see less pass-through, there aren't historical experiences we can consult here, really. So it may turn out that the pass-through is less or more than we think. And I think we're going to be learning. We'll get a number for June. An inflation number for June. We'll learn something then. We'll get it for July as we go through the summer. We should start seeing this. And if we don't, I think we're perfectly open to the idea that the pass-through will be less than we think. And if so, that'll matter for our policy.
Well, I've been talking with a lot of my constituents about these tariffs. And the question that comes up is, now, is this going to only hurt maybe the big businesses? What about our small business people? What about the people that we buy goods and services from every day in our communities? Is this going to hurt big business as well as small business?
Yes, I don't think it's. I think it will certainly. If you're a smaller company that maybe imports a single product, that's a common business model these days. Then you may if your product is tariffed, you may be the one that's affected significantly. Whereas bigger companies have more resources and a more diverse.
That was a big bump, chat.
Why do you think you can resist the president basically telling you what to do? What gives you that authority?
I don't think about it that way at all. I think I have a job that I'm sworn to do, and all I think of is how much people rely on us to get it right. It really matters that we get it right, and that concentrates one's mind, and so that's what we think about at the Fed. We think about what's the right thing. I have all I want to do in what's left of my time at the Fed is have the economy be strong and have inflation be under control, have a solid labor market. I want to turn it over to my successor in that condition. Of course, that's what keeps me up at night, is to do that. And that's what I think about. That's the only thing I think about.
So how
Bukas
are
pa,
you
no?
protected? By law, by constitution? Where does your authority come from?
I think, I've covered all that. I do think we're fully protected, and again, I don't think about that anymore. What I think about is let's just do our jobs, and that's what we do. We
Ba't
don't talk
lagi
about
silang
those
pinag-aaway ni
issues
Trump,
at
no?
all. And
Pinag-aaway
all we
sila ni
do is
Trump.
do our jobs as best we can. And
Si Trump kasi
it's not an
pinipressure niya
easy
na
job,
magbaba
but
ng
it's
interest
one
rate to eh.
we've willingly taken on, and very
Si
important
Powell.
that we remain focused
Pero
just on the
nakakatawa na
job
mas
and not
apektado pa
on
yung
other
Congress.
things.
Hindi ko alam kung
Thank you
Congress
very
ba to.
much. I yield back.
Mas
The
apektado
gentleman
pa yung
yields
Congress
back.
kaysa kay Trump.
The chair recognizes the gentleman from New York, our Vice Chair for Communications, Mr. Lohman.
Hearing. It is hearing.
5 minutes.
Thank you, Mr. Chairman. Chairman Powell, as recently as yesterday, Fed Governor Bowman indicated that if inflation pressures remain contained, the Fed should consider lowering rates, and said she is open to a rate cut in July. Governor Waller said very much the same. Do you believe that we are in a position where we may be able to cut rates in July?
So I would say this. I think if it turns out that inflation pressures do remain contained, then we will get to a place where we cut rates sooner rather than later. But I wouldn't want to point to a particular meeting. I don't think we need to be in any rush because the economy is still strong. The labor market is strong. If we were to see the labor market, meaningfully weaken in a way that was concerning, that would matter for that decision. But if we see inflation, continuing not to move up, we hadn't expected inflation to move up much. We do expect it to move in the summer, and if we see it not happening, we'll learn from that.
The September 2018 Teal book suggested that the Fed, seeing through tariffs' inflationary effects, is an
Mamaya
appropriate
pagagalaw yung
response
market
so
niyan
long
kapag
as
tapos na si
inflation
Powell.
expectations are firmly anchored and that the pass-through costs are relatively short-lived. Would you agree that this assessment from the Teal book still applies to today?
I would. Those are the exact factors that we cite when we talk about this situation, plus the size of the tariffs.
Right. So let's assess the current economic situation. The Monetary Policy Report states that longer-run inflation expectations, quote, continue to be broadly consistent with 2%
Yung ES
inflation.
tsaka NQ.
And a Harvard study argued that
ES is
despite the
dumping.
relatively quick price responses to tariff announcements, the overall magnitude of these changes remains modest. So if these conditions hold, is it not unreasonable to think that underlying inflation trends should continue its path towards 2%?
That's certainly a very defensible position. I think what others on the committee think, and what I think, is that this is a question we need to be careful with because it's different than it was in 2018. The difference is that we haven't had 2% inflation. In 2018, we hadn't had an inflation as high as 2% for a decade anymore. Right. This is a different situation. We haven't fully restored price stability, and another shock. We have to be careful if there's a meaningfully large and sustained inflation shock. We have to be careful about that. And so, I think we're just trying to be careful and cautious, and we really think that's the best thing we can do for the people that we serve. If that happens, we need to be there for it. And so,
Chat, I'll be out. Down ako today ng
But again, if we continue to see inflation come in,
down ako today ng 12 points. I took 2 trades. One here, I took break even pero naslip ako ng 1 point. Then here I lost 11 points on this trade. It did go into money for like 5 points. Ito namang trade na to, mabot siya sa money for about 8 points, but I was not able to capitalize on that. So I took an L, 2 L's, 1 L, 1 break even. But the good news is, I preserved my capital. It's not a big loss in a choppy environment. So yeah, I would be out, chat. Nothing more interests me here. I think I may take a trade later on during lunch hour macro, or maybe PM session. We'll see. But for now, I will end the stream. Pahinga muna yung mata ko. I've been looking at the chart for 2 hours already. So yeah, all-time high is truly a possibility. 500 points away. But yeah, we'll see. Thank you for hanging out, chat. Like the stream before you go. I wish I could make this entertaining, but it's not an entertaining price action. Remember, we live to fight another day. Tomorrow is gonna be Powell speaking again, and then tomorrow will be Powell speaking, and then Thursday wala na. Baka yung action is aabot siya ng, baka yung magandang action will happen on Thursday or Friday. We'll see. But for now, I have to go, and sayonara, chat. Out.